Hello everyone, welcome to my channel. This is Jack Graham, your Las Vegas and Henderson Realtor. Today we're going to have another housing market update and I'm going to go over a lot of things today. So stay tuned until the end, that way I can give you my opinion on what's going to happen next in the real estate market. Let's get into it. Alright, so first of all, we have to go over what's happening in the market as far as the inventory goes. In fact, we have a lot of people that are not listing their homes for sale, and that is causing a shortage in inventory, which has caused ultimately a big spike in home prices. In fact, out of the top three reasons why homeowners are not putting their house on the market is 31% of people say that it's for financial uncertainty, as well as 34% of people say that life is too uncertain right now. In general, just life. These are the biggest concerns in people's minds, which, it's understandable. After all, if people they don't have a job, what happens is they are going to be stressed. And if they have that financial stress, they're not going to put on the house on the market because they will never be able to purchase another one if they end up selling theirs, if they end up losing their job. As well as another 25% of people are concerned with the pandemic and being that, it's a health concern. In fact, a lot of elder people are scared to contract this virus and, they just don't want to have their house on the market. That is going to allow people to get into their home to see the house and potentially, getting infected. So these are the main reasons why people are not putting their home on the market according to the stats and what people have been saying. However, this is causing a big shortage in the inventory. In fact, if you look at the year-over-year change in listings, as you can see in this graph, listings have been going down, at least the number of listings. We have almost 40% less listings compared to 2019. This was the year-over-year change in listings. Now, that's a huge concern because, if we don't have any homes to sell, then the homes that are going to be on the market, the people that are actually buying them are going to fight for it, which is going to increase the prices of homes. Now, this is the percentage of overall forbearances in the United States. In fact, forbearances have been decreasing according to these stats, and ever since May, we've had from a decrease from 8.5% of people, applying for forbearance, going down to 5.83. Now, we mentioned this before on this channel, how forbearances are actually, a great way for people to save money, to put some money on the side. In fact, if somebody can just go onto their website and apply for forbearance without even having to show that they lost their job or that they've actually been hit, financially by this pandemic, who's not going to do that? In fact, a lot of people, I think, they are taking advantage of this and they're saying, you know what, I am going to apply for forbearance and then we'll see. Worst case scenario, I'll just save the money for now. I won't spend it. And if they ask me for the money, I'll just give it back to those people, to the banks. So that's what's happening right now with the forbearances. And I think this amount is going down because of that reason. A lot of people just took it initially just because they were concerned in case they were going to lose their job. And they're saying, hey, there's no real concern right now. So my job is doing well and I don't think it's going to go anywhere. So they're just, getting out of the forbearance. However, I think this is trending down and it continues to keep going down. Which, the reason why we mention these forbearances is because if these end up going and, into, foreclosures or evictions for people, this is going to cause an increase in homes on the market, which might actually be beneficial and a little bit healthier for the market because if prices keep going up the way they are going, I don't know if that's really sustainable. Now, I wanted to cover also, this is the amount in millions of forbearances that are right now in the market, and we're looking at a decrease from 4.68 million to 3.1 million, so about a third in decrease, or a little bit more actually. And maybe this is going to keep going down, maybe it's going to stay like this for a while, but overall it looks like we're getting out of the worst from this health recession that we've had. Another interesting piece of stat that I wanted to go over is how much of the stimulus checks, have the households used for, to pay down debt and save, or to just go out and spend. And if you look at this percentage right here, you'll see that 35% of people paid down debt, 29% just spent the money, which is probably not the best thing, but hey, a lot of people are in a lot of financial trouble, and they need to go and spend this money to survive, which is pretty much to buy food for the family. So this is understandable, this 29%. And then we have 36% of people actually saved the money. And I think out of this 36%, there's a lot of people that actually invested in the stock market, because the stock market is now acting just out of whack. And it just doesn't make sense for the profits that, some companies are making. Everything is just overinflated, I think, right now. And that's because a lot of people got their stimulus check and they're saying, hey, let's put it into the stock market so we can maybe double it or triple it. And some people actually have been successful at that. Now, if you look at the average U.S. FICO score, this is very interesting, and it kind of correlates to the past slide that we showed you right now. And that is, that FICO scores have been going up. If you look at last year, this is 2019, the average FICO score was 706 in the United States, all the way until October 2019. And then we saw a spike in April. Interesting, right in the middle of the recession. These people the people that have the most debt are most likely the people that make less money, and the debt amount has been going down. In fact, FICO scores have been increasing to 708 in April, and then they went up to 711 in July. And I think this is gonna trend up a little bit more, even because people kept taking these stimulus checks, and they pay down debt with this. And your credit score is highly correlated to the amount of debt that you have. If you have a lot of credit card debts, that's gonna it's gonna hurt your credit score. So this is definitely helpful for the affordability, which is something I'm going to cover right now. In fact, if you have a credit score of over 700, you're going to get a better interest rate on your mortgage. And that's causing, in addition to super low interest rates, that's causing the affordability to go up, which means people have been able to afford more home. Another thing is the weekly unemployment filings. And this is a graph that shows you how many million people apply for unemployment weekly. And we saw back in March right here, we have 6.9 million people applying for unemployment. And now it's gone down to 0.75 million per week, which is way lower. Now, I'm not saying this is good, but it's getting back down to the normal levels, which is great news. Now, housing affordability is what I wanted to touch up next, which this graph is showing you the index ever since 1990 all the way until today, how much it was affordable to purchase a home back in the day, right here in the 1990s and right now. And as you can see, although homes were way lower in price back in the day, affordability was way lower. In fact, people could afford way less home back then. But then we had this huge, decrease in, and right here, actually, you see from 108, when the index was 108 back in 1990s, we had a drop in home prices that was huge, all the way until 1993, and then they started leveling up. So you can see how even in 2006, when we were at the peak of the real estate market, we had, housing affordability at the lowest, 108 again, and then it went back up. But this time it got hit big time. And the other thing that has been influencing this is also the interest rates, right? So right here we saw a decrease in interest rates that was huge, which allowed people to, afford more home overall. And that's what's been happening ever since 2006. Affordability has gone up, which means a lot of people have been able to purchase homes and it's been affordable to live in homes. And the thing is, since interest rates stayed this low, actually they started going up all the way until 2018, and then they dropped back down again because of the Feds dropping the interest rates again. What we see is that we're nowhere close to what we had back in 2006, which I know, and again, this is not financial advice. I'm not giving you advice and telling you to go out there and purchase homes, but I just want to give you the data so that you can make the decision and it's at your own risk. But if you look at the affordability right now, we're at 159 as far as index compared to 108 in 2006. That's completely different, which means, in my opinion, we have plenty of room right here to go down in affordability, which means that home prices are going to go back up. Now, as you can see right here, there's a little bit of a drop in affordability from last year. And the reason why is, even though interest rates have gone down ever since last year, the reason is because home prices have been going up. So they've been eating up all these, interest rate drops. And the people that benefited the most from the drop in interest rate are the people that purchased in March, where they bought for home prices that were, last year home prices, and they pretty much locked in the super low interest rates. Whereas the people that are buying right now are probably taking a little bit of a hit because they're purchasing homes at a little bit of a higher price compared to last year. We saw in Las Vegas 10%, 12% increase, in prices, which is, very, very, not concerning, but, it's difficult to see this, this affordability, this increase in prices, to see it keep going up. I don't think it's going to last that long. And I'm not saying that prices are going to drop, but they have to level off at some point. And the reason why I don't think prices are going to drop again is because of what we've seen right here, which is the affordability, which is the main concern that I have in mind. And I watch this all the time just to make sure that there's not going to be a drop in affordability, and that can cause, a drop in home prices. But for now, we have plenty of room to go. And home prices can go up another 20, 30, 40% before we see anything, any substantial drop in the market. And then right here, we have Mark Fleming, which is the chief economist at First American. And he's been saying that the good news is that affordability remains significantly higher than 1 year ago, mostly due to falling rates. And 1 month does not make a trend, which is what happened lately. Affordability has been trending a little bit lower. But this month's decline in affordability signals that the current dynamics producing faster house price appreciation may begin to erode the affordability gains of recent years. So, that affordability that we've been gaining lately, he's saying that, we might not see this affordability stay this high up. It might keep going down, just like it has been going down ever since 2012 overall, even though we've been seeing a decline in interest rates. So, point of the story is, if I want to summarize it for you, there is plenty of room right here for the affordability to go down before we can see the affordability get back up by home prices dropping again. And that's where I'm saying, hey, now more than ever, with low interest rates, is a great time to afford a home. And the reason why I'm saying this is because if you end up, let's say, not buying right now because you're worried about home prices dropping in the future, and just buying a home right now and being underwater in a year or two, that's totally understandable. But you could also have to consider the fact that if it does drop right here, the affordability, and you end up not purchasing a home, maybe home prices are going to go up, or if not home prices, interest rates might go back up, which is something that is concerning. In fact, if we look at the projections on home prices right here, We see Zillow reporting a 7% projection on price appreciation. Then we have all these big boys right here in the real estate market, all saying that there's going to be an appreciation. The only one that says that there's going to be a level off and we're not going to see any gains is CoreLogic. But overall, that's what we've been seeing. And a little bit about Las Vegas right here. We can see that back in 2017, home prices were way lower, and then we've seen a huge spike all the way until now, when we are at $322,500, the median sales price for single-family homes in Clark County, Nevada. Now, this is all-time highs as far as Las Vegas goes, and honestly, I don't think there's any signals right now that it's going to go down. One thing that we do watch on this channel is, a lot of the inventory stats, and in fact, I want to pull it up for you. Right here we have the months of supply, and months of supply has been trending down ever since November of last year. So we see this inventory going down, and that's a big problem. So until we start seeing inventory going back up, I'm not worried about it. And the only thing that actually could have the inventory go back up is, the evictions. As we know, the federal moratorium for evictions is going to expire at the end of the year. Now, I do believe that the government is going to intervene and try to extend this moratorium so that people can, so that people won't get, hurt and kicked out of their homes, which might be a problem for the real estate market. And I just wanted to update you with what's going on. I don't see any problems going on in the short term unless the evictions happen again. But in the long term, again, I stand with my vision of, the market being, having a lot of room to go up before we can see any correction. And that's where I stand. Let me know what you think down in the comments. If you like this content and you appreciate me, sharing this knowledge with you, subscribe to the channel and hit that notification bell right next to it. That way you get notified when I post a new video. And share this with somebody that might be thinking, hey, home prices are going to crash right now. Just to give them a little bit of a perspective. I'm not saying I'm right. I'm not saying I'm wrong. I'm just giving you my perspective and my point of view, just looking at the data, so that, we can bounce off ideas off of each other. And if you are interested in more of this, let me know. We can always chat. My information is down in the link below, and you can give me a call, and we can talk about this and talk about your situation, whether you're selling or buying. I'm here to help you make the right decision. So without further ado, thank you for watching. I'll see you in the next video. My name is Jack Graham, your Las Vegas and Henderson Realtor.